What's going on, YouTube? Today's day number 36 of the $1,000 account challenge, and it's a red day. I booked a red day, but I'm not mad about it. I'm down $69 in the account, or 2.61% of the total portfolio balance. So I'll walk you through the trades and exactly what happened. I don't think that I took bad trades today. I just took trades where we did not get initial follow through. So straight off of the day trade watch list, we had AMD as a long idea above $174. AMD breaks 174 right here and runs all the way up to highs of 176. This to me is screaming that this is confirmation. The stock is breaking 174 and not just barely breaking it, it's running multiple percentages beyond that trigger level. I mean, 1.3% to the top side before giving us a pullback. So when we do get the initial pullback, today was an alert day. I'll show you the alert. When we do get that initial pullback, I said I'm waiting for the dip entry on AMD, and then at 9:39 a.m. I took AMD entry with room to add in. This is key. Took AMD entry, small size, starter size, with room to add in. I give you the contracts, I give you the fill price, I give you the stop loss at 174. Now, the reason why I took the entry with a small size to begin with is because there was a chance that AMD could continue to dip, right? All the way down to 174. So 9:39 a.m. is right here. Why would I even take this entry if there's a chance for the stock to still dip? Because there's also a chance that the stock may continue to rip, right? This dip could have gotten bought up. It could have ran all the way up into the high of day, and we would have missed the trade. So in an effort to mitigate risk, but still put on a bit of risk so that I can capitalize on the trade, I enter early with a smaller size. So unfortunately, in this scenario, the stock does continue to dip. That's part of the plan. We are prepared for that. We hit 174, it starts to consolidate, and then at 9:43 a.m. I added to the position right here. AMD added to the position, new average 155, stop loss is still 174. We do start to get a bounce back up. I think we're actually pretty close to break even on this bounce up, because remember, our average is going to be in the middle of our two adds. So here and here, our average somewhere up here, we're pretty close to break even on this pop move, and we just don't get follow through topside beyond that. The stock turns around, reverses, drops right below 174, and I cut the position. The percentage loss here, AMD, was only a 10% loss, 155 to 140. So percentage loss was in check. That's okay. The sizing of the position was in check, right? So from a monetary standpoint, the loss wasn't that great, you know, something like $40, $45, $50. And we followed our plan. We did exactly what we said we were going to do, which is get the early entry, right? Just in case, but to mitigate risk, small size, add to the position at 174 and look for the bounce. We just didn't get the bounce. There's literally nothing that we can do about this scenario other than to cut the trade early. If you hold through on this, you're down even further over here. You do get a rally back up, but because we're trading options contracts, there is a thing known as theta, which is premium decay over time. So the longer that you're holding these contracts for, you know, if you decide to hold through all of this consolidation, even if you close it out up here at a higher price point than what we closed it out down here at, there's a chance that you still lose more on those contracts because your premium is burning over time. So the earlier you can cut the position, the better. And we did fine by that. AMD since then has really done nothing since consolidate. So we made the right choice, I feel, by cutting this position when we did. Next one that we went into was PayPal. So this was a gap fill trade idea on the daily time frame, and it was showing this nice strength early on. So I mentioned while we were in the AMD trade that PayPal was worth watching at 942 as it's pressing up into this gap area. Our long trigger today, if we go back to the day trade watch list, our long trigger for PayPal was at 59.5. So we get the rally up, the break of 59.5 right here, and it enters into a phase of consolidation. Now we decided to go long off of a dip down close to 59.5 to see, you know, maybe this could break out from this consolidation into the high of day, give us a run higher. We did the same thing here, though, that we did with the AMD position, which is take the smaller size. So here, let's see. Loaded PayPal long 947, took dip entry long on PayPal with room to add. So same thing, right? We're taking the entry long, but with a smaller size to mitigate risk, but to put some risk on in the event that this stock does run. We don't want to miss the move. I give you the contracts, give you the fill price, give you the stop loss at 59.3, and I said I may add if this dips lower. We do get the high of day move. So we enter here, we do get the high of day move up right here. We are up 10% at this time. I decided not to take profits. You could have taken profits on this. I'm not sure if it would have recouped the AMD trade, because remember, on the AMD trade, we added and then lost. On this one, there was no add here. So it wasn't worth it at 10% to take the profits, because from a monetary standpoint, I just wasn't up that much. I was trying to give the trade room to work. I thought maybe we could get the run up into the gap and see if it'll fill. It comes right back down, consolidates, and then it breaks down from the range. So maybe a mistake here was that after seeing all of this consolidation, maybe the mistake was that I still added to the trade rather than just closing it out. I think maybe the better choice here in hindsight would have been to just close the trade out as it breaks back below the 59.5 area, breaking down from this consolidation from this range. All right, that's one thing. But I was trying to follow my plan. So I said stop loss initially was 59.3, right? So we do get the pullback to 59.3, and that's where I decided to add to the position. PayPal added long 10:01 a.m. New average is 89. Stop loss is 59.2. So because I added to the trade here, I didn't want to get stopped out prematurely, so I gave it another 10 cents to work, right? I gave it some extra room to work. Unfortunately, right after the ad, same exact thing happened on this. That happened on AMD. We just did not get follow through up from that initial move. The stock decides to curl over and come down. I did give it some room to work. You know, I didn't have a hard stop set, had a mental stop set. I gave it some room to work. I was going to see if it was going to bounce off 59.2. It did. It started to bounce up. But then my fear was, you know what? We are on the backside of this PayPal trend. Maybe this only creates lower highs from here, and I don't want to hold this position longer than I have to because we're already down. So when we get the rally up, we're close to break even. I wound up closing the trade out for about a 5% loss. I cut PayPal long, entry 89 after the addition there, and now at 85, 5% loss. Again, just no follow through from the initial move. I said it could still work, but I don't want to be down on the position longer than I have to. And we made the right choice again. You know, the stock right after we sold, literally right after we closed it out, dumped and breaks back below the PDC and has yet to recover. So on a day like today, you know, we are down. It is a red day. We're down 2% in the account. We're down about $70 in the account. Should we let a day like this hurt our confidence? Absolutely not. This is something that I'm actually rather proud of. You know, I think that we managed our trades fine. We took pretty solid entries. We did follow our plan. We added to the position at the spots that we said we were going to add into. We committed to the trade. We committed to the plan. It just didn't work. And, you know, what else can we do? There is nothing that we can do. We can't control, you know, if the trade is going to work for us or not. But what we can control is when we cut the position. So if we decided to not close the PayPal trade out here and then hold through all of this, now it becomes a bad trade because we're not following our plan of cutting it, you know, within a managed risk amount. Same for AMD. You know, if we, well, it's kind of working now, but if we did decide to hold through on this and then, you know, close it out, I don't know, 45 minutes later or 30 minutes later, over here, we're not following our plan. Then it becomes a bad trade, right? If we're holding it longer than what we intended to. But we didn't do that today. So followed the plan, just didn't work. Nothing more that we can do about it, and we booked a red day because of it. So be proud. You know, if you have a smaller loss in your account today, small losses are okay. Break-even days are okay. Green days are great, small green or big green. It's those big red days that we want to avoid and stay away from, and we certainly did that today. So I have no problem with taking a red day. We're just going to come back tomorrow, reset, refresh, and get some fresh setups. Thank you for watching so far. Press that like button for me if you haven't done so already, and consider subscribing to the YouTube channel as it is free and the best way to support this type of work that I do. Thank you so much for your time, and I will see you tomorrow when we continue the $1,000 account challenge. Cheers.